Development Bank of Southern Africa is tasked with delivering developmental infrastructure on the continent. It's posted net profits amounting to 3.1 billion rand, now boosted by foreign exchange gains of 744 million rand. Now, the National Treasury's Infrastructure Fund projects totaled approvals of 39.7 billion, an increase from the previous year's 14.5 billion rand. Now, joining me for more on these results is Zodwa Mbele, the acting CFO for DBSA. Thank you very much for coming in. I've seen your results described as pleasing by the press so far, so you must be fairly happy with where you're sitting at the moment. But just tell me, just what encourages you in these difficult times from this set of results?
Okay, thank you very much, Chris. I'm standing in for the CFO. I'm the group executive responsible for the execution, which is a transaction team. Really what encourages us, if you look at the macroeconomic environment in the last couple of years, even worse with last year, you know, we went on a technical recession as a country. So if you look at the subdued economic environment, it presents less opportunities for infrastructure to be developed. You have to think about the government, you know, it has to reprioritize in terms of the infrastructure. You have to think about the private sponsors, you know, organizations which are big, they have to either curtail or defer their capex implementation. So that has also been compounded, you know, by the fact that governance issues have heightened. Yeah, and as a result of that, if you want to land into any environment, you also want to put very stringent governance control. So there's a lot of negotiations that needs to happen for the parties to meet each other. So if you know, take into consideration all these factors, you really need to sit back and say, I think under the circumstances, we've done very well as an organization.
And so one of the things that always fascinates me, I spent a lot of time reporting and up and down the continent. Just give me an idea in bricks and mortar, a couple of projects through the finance that you've been issuing over the last year that we will see on our travels. Just give a couple of examples.
Yeah. So we've done in the last financial year, of course, ESCOM being one of the projects that we have funded. If you recall, there was a club deal which comprises of the development finance institution as well as the commercial banks in South Africa largely. So that's one aspect of the funding. And the other funding went to City of Johannesburg. We've disbursed quite a substantial amount of money, about 3 billion to that. We've also dispersed into other sectors which are more municipalities, smaller relative to smaller municipalities other than the metros. So that's another disbursement. And a couple of the IPP, if you recall, we've had quite a sizable portfolio of the IPP, and they continue to disperse because some of the disbursement do not necessarily originate in this current year, but they are coming from the previous financial years of what we have put in there. So, so largely those are the disbursements that we have. Of course, we've had disbursements in outside SA, you know, to certain countries. Sonangol, for instance, in Angola, it's one of the disbursements we've made this year. And there will be also a project that had already started in the previous years that continue to disperse in this current year.
And we just talk about impairment a bit, expected credit losses. The figures here are saying that the provisions you're making for next year is 1.44 billion against impairment last year of 623 million. Now that's gone up. What's behind that? So
what's behind that number? It's because we have now for the first time implemented IFRS 9, which is an accounting statement in terms of the International Financial Reporting Standard that has replaced what we call International Accounting Standard 39, which was IS 39, the financial instrument. Now, in that statement, it's a technical statement in the sense that the IS 39 was more backward-looking, so it was based on the incurred loss, so losses had to crystallize. Whereas if you look at the IFRS 9, it's more forward-looking. It even gets worse if you predict that, or maybe the deal has kind of deteriorated post-inception. In that way, you have to now think about the impairment over the life span of the project, right? And if you think about DBSA type of funding, we tend to go long in terms of our tenure, you know, so you have to almost provide over a life of a project over 5 years, depending how long it is. Whereas if the credit quality still remain intact, you also still need to have forward-looking for the next at least 12-month window period. So that has driven the number. But underpinned by, for instance, I'll give you an example, one of the countries in there which has driven that number up, it's Zambia. So you look at the macro economic situation in Zambia, whether the country is highly indebted, is yet to be proven. But there's a lot of talk about the debt situation in Zambia, which then impact on the ability for some of the projects that were funded to repatriate the payment back.
So how much are you exposed to Zambia in terms of money and risk?
So Zambia is actually it's one of the countries that you are highly exposed to outside SA. So our book is about 50% largely in South Africa. Second largest book is in Zambia, and then thereafter will be Angola and others. So it's quite a sizable portfolio, especially in the energy sector. Almost 6 billion. It's quite a sizable book in Zambia. So as a result, that impact is quite huge. Not that they've defaulted, but as I said, it's not yet crystallized, but because the statements want you to be forward-looking.
Back here to headquarters in South Africa, so we've been reporting on the news how Mr. Ramaphosa has got some more advisory bodies set up and he's promising action soon. But are the reforms in this economy going fast enough for an organisation like you that relies on the health of the economy?
So I guess it's everyone's view that, including government itself, the reforms with government, they take longer, to take shape. It's just the nature of the beast. But what we need to do is not to sit back and wait for government, but we've been proactive enough. In fact, we have even raised our hand when government was talking about the infrastructure fund. Coincidentally, DBSA had their own ideas of how we want to set up our own relatively smaller fund that can be leveraged by private sector and also assist in implementing certain projects that ordinarily would have been implemented by government. And when I say implementation, it's not a funding part, because funding is not an issue. The issue is to get projects that are bankable. And that's where the upstream work, that's where we see there's more lever from DBSA based on experience to play a very important and catalytic role on the upstream work before you can bring everyone else to come and fund the project. So what I'm trying to get at, we're not waiting for government to move the needle for us, but we're also proactive in how can we assist government, given that we are also an SOE that is owned by the very same government. And the government cannot resolve all the problems. Government has got these SOEs for a reason. We need to be the implementing agencies and be innovative enough and raise our hands where. So coincidentally, we said, government, you are talking about the fund. We also had our own ideas. So how can we partner in this relationship? And as such, I think last year in the budget speech, the president did indicate that the fund will also be, it's a partnership between DBSA and other GTech, as well as the PICC. It's largely because they realize the role that the bank can play in respect of that.
Another line here on your results here, cost to income ratio increased to 23%. How much of a concern is that for you?
Oh, no, it's not much of our concern because our costs are very contained. Possibly you'll see with most of the financial institutions, the banks, that's not the ratio they normally have. It hovers around the 50s generally. 40s if they are really, really good. But obviously I'm not comparing ourselves with the banks from the perspective that we don't have a big network that we operate. They have a lot of operations that they operate. But we also have our own target, which is 35%. And we fall far below that. So we're very much cautious of the cost containment, and we continue to ensure that we restrain that. And it's also in view of the fact that, as you've seen, I'm sure you'll get there on the disbursements, they've gone down. However, our numbers have gone up in terms of the collections and net profit, etc. So, yeah, we're acutely aware that we don't need to be spending a lot whilst doing business.
Well, hopefully with your work we'll be seeing a lot more railways, roads, bridges built across this entire continent. Right. Thank you very much indeed for your time. That was Zodwa Mbele, the acting CFO for the Development Bank of South Africa.